Since we are live already, are we recording this, the video?
Yeah, we are recording.
Okay.
So what I would suggest, Dipanjali, if you can give a brief intro about Kineet and me, and then we can start.
Okay, yes. So thank you everyone for joining in. I'm already, a lot of people have joined our LinkedIn Live also. Thank you everyone for taking time out on a weekday and joining us. So Singapore budget was announced on 18th February 2022 and Mr. Wong's maiden budget it was. So a lot of queries we have received with respect to how it is going to impact the local businesses and the foreign workforce, considering the scenario that we are in, considering the COVID and the visa issues and everything. So we have, in this webinar particularly, we'll be covering major announcements that have been made. There have been a lot of announcements that have been made with respect to the skill development, green transition, but we will not be touching upon all of those. We have selected, handpicked the major ones that impacts the businesses and the individuals with respect to taxation and few other new announcements, and collated this webinar. We are live on LinkedIn. We had also asked for questions from our participants earlier. We will take those up and you can still send in your questions. Just type in the chat box of the LinkedIn Live. If you're on LinkedIn Live or if you're on Zoom, you can send it to us in the Q&A section. So we have our speakers, Alok Patnia, who is our managing partner, and we have Kenneth Ho, who is our Singapore country partner. So with this, I will hand this over to you. Alok, if you would give a brief introduction about what the budget encompasses overall, and then you can take this forward with Kenneth.
Thanks, Dipanjali, for the introduction. And I welcome Kineet, our Singapore country partner in this webinar, for taking out time on a midweek on a Wednesday. And budget is always a very important event in a country's economy and the financial timeline. But for the last 2 years and even this year, the budget is more important because of the simple reason that we are in the pandemic. We are in the, I would say now, end of the pandemic, I hope. And because of that, the budget becomes more important. So on 18th of February, the Finance Minister, Honorable Mr. Lawrence Wong, delivered his maiden budget. And even as the COVID-19 pandemic and other significant headwinds such as geopolitical tensions which we are seeing right now, which are resulting into global supply chain crisis, and there is an inflationary pressure continue to impact economies, Singapore economy has made a strong comeback in 2020-21. Kineet would discuss all those things in detail. And Singapore has maintained its growth forecast of 3 to 5% in the first quarter of 2022. If I want to tell you a few of the important part in terms of what we'll cover and what are the budget about. So Singapore's budget 2022 investment is broadly into 5 main areas. One is invest into new capabilities, encourage local R&D innovation, invest into Singapore people, foreign workers policy framework and skill development, then advance in green transition, carbon tax, renew and strengthen the social impact. And the last point is develop a fairer and more resilient revenue infrastructure response. So apart from outlining the government plans to Singapore's future, this year's budget also included much anticipated tax proposals, specifically carbon tax, wealth tax, goods and service tax, and an update on the possibility of a minimum effective tax rate. So similar to prior years, the budget also seeks to address short to medium term concerns like rising living cost, impact of pandemic on specific industries such as well as long-term issues like aging population, social mobility, economic transformation, climate change. What stands out as an exceptional in this year's budget are the decisive steps taken to strengthen the economy and social compact, difficult decision but necessary for Singapore to have. And I think climate change remains a top priority for Singapore. The finance minister had announced that the carbon tax will increase from $5 per ton to maybe a $50 to $80 by 2030. The finance minister stated that this is not a revenue generating exercise but a but an exercise which will strengthen our will to support green economy. It has also assured that the government has added 640 million to 6 billion assurance package in order to soften the effects of GST increase to lower and middle income household. To address long-term structural changes, the government announced to accelerate investment in digital capabilities, instill pervasive innovation across the economy, provide more support for small and medium-sized businesses into R&D, which I've already spoken, and overall budget provides clear directives in areas that will strengthen Singapore's competitive advantage and social compact, as well as prepare the country for a brighter and greener future. And with this, I hand over the dais to my friend and country partner, Kineet. He will go deep into the specific provisions and what are there in the budget. So over to you, Kineet, and thanks for joining in. Over to you, Kineet. Thanks.
Okay, thank you, Alo. Yeah, hello everyone. Welcome to this webinar in 2022. It's our first webinar of the year. Okay, so you guys hear me?
Yeah, we can hear you loud and clear.
Okay, great. So budget 2022 was about sometime 2 weeks ago, and now we are giving you a bird's eye view. So as we go along the slides, I will explain what are the changes, which are the things still remain, which are the things which will be impacting businesses, especially Singapore incorporated entities, be it local incorporation or foreign incorporation. Okay, as of currently now, our corporate tax still stands at 17% with new startups, individual startups with enjoying the first 3 financial year with full exemptions of, as you can see in the slides on the left hand side of here of my slide, you can see definitely there's full and partial exemptions for new startups or existing startups which has more than 3 years. So this definitely has no change, and our corporate tax actually has been still at 17%, one of the lowest in Asia, probably the second lowest in Asia after Hong Kong. But as going forward, in order to be in line with the OECD BEPS 2.0, definitely there will be an effective, there will be a minimum effective tax charging at 15% soon, going for the next few years. But the government at this point of time is still exploring the cost and benefit effects to see where to be in line with the global taxation of a minimum 15%. Yeah, so practically there's this illustration. Okay, now we're down to this personal income tax. So for personal income tax, for businesses wise, definitely it won't affect so much, but it's much more on the high earners. For the high earners part, it will actually affect especially people who are earning more than 320,000 onwards, or should I say more than 500,000. If your annual salary is more than $500,000 and to less than 1 million, in the past probably is kept at 22%, but now they have increased another 1 percentage point to the 23% here. And anything in excess of 1 million, probably let's say you're making about 3 million. So after the first million, which is progressive tax rate up to 23%, the remaining 2 million will be taxed at 24%. So this is extra 2% increase for high earners, especially people who are earning more than $1 million per year.
Okay, so this is an extra 2% increase for people who are earning more than 1 million in Singapore.
Yes, correct. But okay, maybe I can give you an example based on what we are seeing here. So for instance, to illustrate a taxpayer chargeable income of 1 million. So in the past, the first 320,000 is probably at up to 20%. Then excess of 320,000 chargeable income will be at 22%. But there's a change now over here. So practically with effect from so practically for effect from 1st Jan next year onwards, salaries which between 500,000 to 1 million, they'll be taxed at 23%. And then for more than 1 million, definitely 24%, as I mentioned earlier. So this will have a great impact of the extra 1% impact will be extra probably about $5,000 of taxes to be paid. And obviously in excess of 1 million, then depending on how many millions you're making, so the extra another 2% will probably result in easily more than $10,000 to $15,000 of excess taxes to be paid.
Right. Okay.
Yeah. So this is something which the tax rate, yeah, you can see on a progressive basis on a personal income tax. So from the first 20,000 all the way up to 320,000, which is from 0% to 22%. This is based on the current structure. But going forward from 1st Jan 2023 up to 31st December 2023, which is the year assessment 2024. So this progressive tax rate, as you can see on the right hand side, yeah, you have extra 2 more columns, which is reflecting at 23 and 24%. So this is what I've been trying to explain for the changes in the personal income tax. But I think definitely, I think it's still cheaper if compared to India. I understand that in India it's like 33 to 35% personal income tax. Alok?
No, I think the highest tax rate is more than 40% for the highest
Oh,
tax bracket.
okay, okay. Yeah.
So what you're suggesting, Kineet, is that up to 1 million, someone who is making income of less than 1 million, up to 1 million, there is no change, right?
Yeah. No, up to 500, up to the first 500,000 there's no change. But after that, the next $501,000, then that is where the impact starts to go in actually. Yeah.
So from 500K to 1 million, the new tax rate, which is 23%, and above 1 million, it is 24%. So up to 500,
correct.
Up to 500K, there is no change, right?
Yeah, there's no change. It still remains as what is you see on the left hand side of the table. Well, our tax is on a progressive basis. So basically, how it impacts businesses and how it impacts personal income tax. Probably a proper tax planning is very important, especially when you're trying to declare, let's say, a director fees or even for foreign professionals who probably have a valid employment pass in Singapore doing businesses. Yeah, as you draw salary, you may also want to draw a director fees or pay yourself a higher bonuses so that you can reduce your corporate tax profit based on the impact. So all these things we can actually probably have a individual discussion for different business and different professionals, so that at least your tax, because different people have different tax planning. So we need to actually sit down individually to understand each of the individual tax situations.
Right. We also need to, as we were doing a tax structure planning for one of our clients, we also need to understand the Singapore-India tax treaty. But this is very interesting. So Singapore has not touched anything up to 500K, and they have brought in. So if I have to summarize, they have brought in 2 slabs. One is tax at the rate of 23%, which is from 500K to 1 million, and above 1 million is 24%. I think it's clear.
Yeah. Okay. Great. Yeah. Okay, so next we are touching upon is the goods and service tax rate. I believe it's quite a sad news because our GST is currently at 7%. And this has been probably over the last 15 years, we have been enjoying at least 7%. But in fact, 2023 1st Jan, the government will give a progressive GST increase from 7% to 8%. And the following year in 1st Jan 2024, it will increase to 9%. So this is what the government is targeting at, to increase the GST from the current 7% to 9% on a progressive basis. So over the last probably 20 years, the GST was first implemented on 1st April 1994. This is like almost 30 years ago. So from a 3%, from a very small impact of 3% to 9%. So over the last 30 years, it's a threefold increase. But still, I believe we are still, in Singapore, we are still one of the lowest in terms of our GST as compared to big cities like London or US or even like in Tokyo. All this, I believe the value added tax or GST, in short, is easily more than 15%.
Right. So it's a bad news for a lot of people, including me and you, that finally the GST rate is increasing in Singapore.
Correct. But then, however, for business-wise, definitely it may not be a bad news, because for business, you can actually, in order to cushion this increase of GST, my advice is actually you can be a GST registered trader in Singapore. If you are registered in Singapore, probably you plan out to get the company to be the business to be registered as a GST trader. Then you can probably minimize the impact of this increase by probably passing on the GST increase cost to the consumers end of the day. whereby when you are, let's say you're buying supplies, buying stocks, your inventories, you can still claim GST if let's say your vendors are also GST registered. So practically, the impact isn't so great, but probably the impact will be passed on to the end consumer who will be bearing the final increased costs.
Right, right, right. Got it, got it. No, I understand that, and it was, I think it was overdue, long due, because of the pandemic and because
Yes,
you know
correct.
the Singapore government also need to collect taxes
Yes, correct.
to run the country properly. Do you
You're right.
foresee that? So do you foresee, Grief, that this GST rate will further be increased to 10 or 12%, or it will stay?
At this point of time, I don't foresee any. If you ask me based on personal opinion, I don't foresee that we are going to jump so high because like the GST system has been in Singapore for almost like 30 years by 2024. So from 1994, which probably we are still a very young teenager back then, uh, it was only at 3%. So back then the impact was so big, but the real impact started to be seen probably in the 21st century, especially when government announced the GST increase from 3 to 5% to 7% in a short space in mid 2025, 2005 to 2007, where the government increased the GST. Then after that, for the last almost 15, 16 years, the government has been committed to remain the GST rate at 7% until only the recent last 2-3 years of budget, where the previous finance minister has announced that there is a need to increase the GST because at the end of the day, social spendings have to increase, medical spending has to be increased, so a lot of things has to be increased. So in order to maintain the budget, to prevent it from running to a deficit. So the next course of action have to be done is increasing the GST to increase from 7 to 9%. So I strongly believe that if the government is prudent in spending, so maybe for the next 10 to 15 years, I don't see any increase from 9% to anything more, unless the future government is not prudent in spending. Then that may be something to be worried about. But I foresee in Singapore, as long as the current government is still in power, the next 10 to 15 years, GST will be still maintaining at this rate at 9%.
Right, right. And I think in my initial comments, when I said that the Singapore government, the economy has really improved in 2021 and now in the fourth quarter. So I think because of that, that the confidence is also there in the minds of the government that the pandemic shock, which was there for everything, for every country, Singapore has come out of it very well. I think seeing the fiscal deficit numbers also. So I think I have to agree with you that this new GST rate will stay for at least for a long number of years to my mind.
Yeah, correct.
Yeah.
Okay. Yeah. So definitely with this increase in GST, so the government also has taken some initiative to probably help the citizens to cushion this impact. So such as there will be no incremental or GST fees and charges especially for government fees for 1 year from next year, and probably even for healthcare there will be some GST absorption on primarily subsidized healthcare and education centers run by the government. And definitely the government is also giving some cash GST vouchers in terms of cash form, some GST vouchers in terms of cash form to help lower income families to cushion this impact. But actually, to be honest, GST increase definitely will impact everyone. But because GST is a consumption tax, so usually is the more you spend, definitely the more you will have to pay you pay more consumption tax. But for lower income families, definitely basic necessities have to be spent. So definitely they'll be one of the group being targeted, having the impact. But for middle income family, you will have to be prudent on the spending already. So usually, like what I've said, the more you spend, the more consumption tax you incur and the more you have to pay. But if you probably spend on the basic necessities and not on a lot of luxurious stuff, I think that is still manageable for middle income families.
Right. I was just going through the notes. Yeah, right.
Yes, correct. So okay, so this is based on our economical performance and outlook over the since the COVID occurs in 2020 in late 2019, and probably so we have probably the government has already spent more than $100 billion to help Singaporeans and businesses to tie through the COVID-19 over the last 2 to 3 years already. In terms of giving cash support, in terms of giving incentives and reliefs, rebates, so forth. So overall, definitely businesses have been affected, but still some businesses with the government help managed to tie through. Yes, we are still in a slow recovery mode, but definitely our recovery is much stronger as compared to our neighboring countries. So we are in a better position to probably spearhead the economic growth in the next 5 to 10 years, especially from the Southeast Asia point of view.
No doubt about it that Singapore economy is in a very good shape and it has come out very well. And we were talking about this earlier also, that Singapore as a country will come out it very well. And I think these tax enhancement measures were, I think it was overdue. It was even though it looks that because of pandemic the government has increased GST or income tax, but I think it was overdue. And we were talking about this in year 2019 also, when you said that the government might increase the GST rate. So
yeah,
I think
right.
the Singapore economic per se is doing well and it has recovered well, and it is in a very good shape.
Yeah. So these are some of these recent government giving grants for small businesses. Probably on the left-hand side, it is also applicable to many foreign businesses who have incorporated in Singapore, because unless you have local employees and you are in particular sectors such as in the F&B, food and beverage, or in the travel or hotel industries, then yes, or retail industry, then you may get all these grants. But on the right hand side, definitely these are one which are very handy to businesses who have employed local Singaporeans or PR holders, because this job growth incentive, even in our firm here in Singapore, it also helps our firm here to tie through a lot of things with this job growth incentives, especially when you employ local or PR holders. So this job growth incentive can be quite a good support to many businesses, and those bigger MNCs who doesn't require this job growth incentive from the government, they end up returning back the money back to the government. And I mean, it's a good initiative by these big MNCs, because they know that they are actually benefiting but not actually helping them to cushion. So they did a return of this incentive grants back to the government instead of keeping it. And I also heard that some entities who are doing very well, although they are receiving this job growth incentive, they also redistribute back their money back to the employees as a form of bonus encouragement, a form of extra incentive for them also. Yeah, so of course, in order to help businesses, I think cash flow is a very important thing. So the government has extended this temporary bridging loan program. Basically, borrowers up to 31st March 2022, they, if based on your financial ability, you can borrow up to $3 million per borrower. That means you can borrow from different banks up to $3 million, and the government is really undertake the risk up to 90%. But however, a bit of bad news. Effect from 1st April, the government is only limit down the borrowing of this temporary bridging loan from $3 million to $1 million per borrower.
Right. So the government is rolling back all those measures which was given to help businesses absorb the shock. Right.
Actually, just a sharing, because I have some, I said that some clients in Singapore here, usually instead they probably have borrowed up to $3 million, but they may not even use the money because the interest rate is quite low. And end of the day, instead of using the money into the business, which they don't require to, they went to buy, I understand from some of my clients, they went to take the money from this borrower, they went to buy stocks, because stocks was very dirt cheap back then, especially in 2020. Stock price was at the lowest, at the rock bottom in May 2020 at least. And they went to buy and they make a big pile. And some more adventurous, they went to get into crypto, and they bought some Bitcoins, and Bitcoins saw to all-time high, and they make a huge profit killing. And now they are probably buying luxurious apartments.
Oh, so what's the interest rate, Kenneth, for this loan?
Okay, the loan is quite cheap, because the lowest it went down was to, I think, below 2%. But recently they have increased down to 4% to 5%. So even effectively at 5% for a business loan is quite low already, because usually the business loan in Singapore, some certain banks can go up to 8 or 9%. So it can be quite costly also to borrow. But now with this, I think the government is, I think, capping at about 4 to 4.5 or 5% only.
Right. Perfect.
Yeah. Yeah. So also definitely there's also some other financing schemes where the government has extended. So for example, enhanced trade loan, enhanced project loan, and mergers and acquisition loan. So all this, the government is actually encouraging more business spending by taking out loans, so you can also do your expansions, or do, especially in the M&A side also, because as Singapore market is a bit, I could say, not as big as probably in India with a 1.3 billion population. But if you want to expand overseas or want to acquire a business to expand your global footprint, yeah, the M&A loans is make possible to businesses registered in Singapore. Obviously, terms and conditions do apply also over here.
Right.
Yeah, okay. So obviously, besides helping the businesses, the government actually wants small and medium enterprise, SME in short, to actually train their staff, train their workers, so that at least instead of the business going to a sunset industry and the workers become redundant, actually the government is also actually encouraging SMEs to also think of new business models, and also allowing their staff to get more training. So there are government grants and credits to allow SMEs to send their workers for training, so that they are well prepared for a new economy. And even there's also, in order to improve productivity, there's this PSG productivity solutions grants also for companies incorporated in Singapore. Of course, there is a criteria such as minimum 30% local shareholding and so forth to be entitled to such government grants.
Right.
Yeah, so our government is also committing up to $200 million for advanced digital solutions, AI, growth digital, and so forth. So especially for Indian startups, if you are able to find a local partner here to tie up together, you may use expertise and tap into the local IT scenes here, and tap into the government grants, so that at least you can get a pie of this $200 million, additional $200 million from the government to build up your business and provide digital solutions, especially going forward in the next 10 years, as the government aims to turn Singapore into a smart nation with via using digital solutions such as AI, robotics, or IoT. So these are something which I think Indian startups can probably start to explore in this area with to tie up with the local IT firms in Singapore here.
So Kineet, I have a question here. So what is the shareholding or minimum capital?
Okay, that depending on the type of grants you're applying. The minimum is 30%, but some businesses may require 50%, and some even may require 70% local shareholding. But obviously, I understand that there are many talented Indian technopreneurs, so they may not want to settle for anything less than 50%. So definitely, it's always a egg and chicken issue, or you have to be you can't be one side winning everything. So the government may expect at least local shareholding in terms of Singaporean citizen or PR holders holding at least 30 to 50%.
Okay, and those are mostly into IT and ITS and
yes, usually like IT startup, robotic, AI, or IoT. Yeah, so these are something I think the government probably have a strong priority in also. And even let's say for agriculture technology, the government also have a plan of 30-30. That means by 2030 we need to sustain 30% of our food line within Singapore. So agriculture is the next thing which the government is also actually exploring the options too.
Right.
Yeah. Yeah, as I mentioned earlier, the government is giving grants to to strengthen our local enterprise ecosystem. So these are something which government is committing giving for scale-up company training committees, or even like the Singapore Global Enterprise program. So these are some of these things the government is trying to encourage more entrepreneurships, and also encouraging more trainings so that people are well prepared to probably start their business or even expand globally. So there are many programs in place. So for these are actually more applicable for locals. For foreigners, let's say you manage to find local partners. I think this is something you may want to tell local partners to tap into. At least everyone is well prepared for the new economy when this endemic probably is going to end soon. Okay, so now it's a bit of bad news again. There are some changes. This is important. This is definitely important to foreigners who wants to set up business here, and who wants to probably for businesses who employ foreigners here. So definitely the Ministry of Manpower, in short MOM, has probably make some changes, especially for EP holders. So there'll be an increase of the salaries from $5,000 to $5,000 onwards. So it's getting a bit crazy already, because the government actually wants to give priorities to more local Singaporeans and PR holders. However, the government still welcome foreigners, but definitely this round the government wants much more better talents which can complement the local economy, which can help to train the local workforce. So like example, even Google is committing a lot in Singapore to train the local workforce, especially in terms of digitalization, in terms of technology, everything. They even have a so-called training center to train to help middle-aged workers to transform from their current profession into an IT role. So this is something I think the government is working at. That's why it's not really a deterrence against foreigners, but it's much more of we wanted to attract better quality foreigners who can contribute and also train the local workforce.
So, what you are saying is that for all sectors except financial services, it has been increased from 4,500 to 5,000.
Yes, correct. And then it may even increase to 5,005. So all this thing is quite a challenge, because every 1 or 2 years, or should I say almost every year, we have been seeing this amount has been increasing. In the past, the EP was only like 3,005. Or even lower, like 3,003, but now it has been going up to like 5,000 already. So I think over the last 3-4 years, the government is really trying to show that they are pro local first. But obviously we are still welcoming foreigners. But the government wants, as already highlighted, indicated, they want quality foreigners to join the workforce in Singapore, which can train and complement the economy.
So it's 10,500 for candidate who is in mid-40s, right? So
yes, correct. This is because people who are in the mid-40s, usually there is a loophole here. Okay, maybe let me explain. Let's say today you are 45 years old. You have probably easily more than 20 years of professional experience. But it doesn't make sense that, let's say in other sectors, we are talking about other sectors outside the financial services. It doesn't make sense that a professional who has 20 years of experience drawing at $5,000. So this is probably some junior role already in Singapore, because even a fresh graduate in Singapore now easily can command a salary of 3,000. After maybe 4 or 5 years, probably to the middle manager level, it's already like $5,000-6,000 salary. So the government is trying to actually do a correction to address this situation, because in the past there are some employers taking advantage of the lower criteria to apply EP for the staff.
Right. Got it.
Yeah. Okay.
So we move on.
Yeah, so these are the changes you can see at least from here already onwards.
So conclusion. Can you go back to the slide once?
Okay. This one?
Yeah.
Okay. Yeah. So this is what actually this is for S Pass. The one earlier slides we are talking about was for EP employment pass. So for this slide, S Pass is for professionals with lower salaries, but usually S Pass I would say is meant for younger employees, probably have about 3 or 4 years of working experience. Unlike these slides over here, this is meant for professionals who in the managerial level or probably in the from a middle to a senior management level people. That's why the increase is over here. This will show the impact. As for the next slide here, this is for usually for lower tier S-Pass is meant for lower tier foreigners as compared to EP. So for this, usually S-Pass, example, maybe let's say in our industry, an accountant with about 3 years to 4 years experience, probably in a senior executive role, but still a junior role. So probably this is the salary like. But if let's say you're in a manager level, then EP is more applicable for foreigners.
Got it, got it. So this is for S-Pass criteria for visa.
Yeah, correct.
Right. So again,
yeah.
Thought.
Yeah.
So just trying to understand this criteria of increasing the minimum salary for EP. Do you still feel that maybe after a couple of years the government will again increase that criteria? Because somewhere I feel that, and in pandemic also, the government wants to train and motivate younger the local workforce, and it's becoming difficult for foreign companies to.
Okay. For this, right, foreign companies applying EP, that really depending on what you're looking at. If today, let's say you are a businessman, you want to come to Singapore and you want to enter Singapore easily, I think the EP would be a good thing because that will allow you to come in and stay beyond more than 28 days in Singapore. So as if you are a business owner, a business founder of the new entity, as long as you are able to support your own salary in Singapore, yeah, you have no issues applying for EP. Definitely subject to approval for MOM. But as for the S-Pass, it's usually for lower tier workers. But if let's say if today you are a business owner, but you want to bring in, let's say from India, you have a big you have probably an established company in India already. You want to expand across Asia or globally through Singapore. So Singapore will be your like a regional HQ like this. So instead of you yourself coming to Singapore with EP, you may want to place your important lieutenants or generals to come to Singapore to be based to open up the market. Yeah, that is the first employee so-called seconded from the HQ. I don't see an issue that the government will actually reject the EP application. So it is a very subjective as a case by case. And yes, I agree with you that this amount has been increasing year in, year out because the government, as I've said, they wanted to give priority to the local workforce first. But obviously, I've also highlighted again, the government also wants quality foreigners to come and complement and train our workforce. So definitely there's always a pro and cons to everywhere. But look at it this way. If today you are a very talented IT professional and coming to Singapore, actually I would see as an increment for EP holders because the salary has been, the amount has been increased already, if you can see. Yeah, so take it as a form of actually an increment actually, rather than it's a deterrence for foreigners coming in.
Right, got it.
Yeah, so this is we are coming to almost the end to this conclusion. Actually, this budget 2022, the government actually has been it's a holistic 360 because it's a budget where actually it impacts people's life, especially on the GST portion. However, it's also a form of sharing the wealth. That means the government is actually redistributing by taxing the rich, although it's not as high as possible. We try to maintain within a manageable tax rate and collecting the wealth from the rich and probably redistribute out to the lower income. So actually, overall, this budget actually is quite well balanced. But in my own personal opinion, I think more can be done, especially in terms of a corporate tax issue, because businesses are probably also have been quite affected in many areas. So maybe if the government, in my own opinion, hopefully next year, the government can roll out some rebates for businesses. Because if let's say there's excess surplus from each end of the budget, the government will redistribute out in terms of cash form to the citizens. But for businesses wise, maybe there's a tax rebate. So like previously before the COVID, there are tax rebates to help companies to cushion rising costs. So depending on see whether the current budget 2022 in next year 2023 whether there is surplus. If there's excess surplus, then the finance minister may propose a tax rebate for entities also.
Yeah, so that's very interesting. Singapore government also gives tax rebate in case if their target is met up. So that's very interesting. Yeah.
Yeah, our tax rebate can be going as high as up to 30% during good years. So do not be feel shortchanged, because I think going globally, FESC, I think all the budgets in the world, in order to probably increase spending or to match the spending, many governments across the world is actually increasing taxes crazily. Singapore, we do it in a very slow and progressive manner, whereby so that the impact wouldn't be felt immediately. Probably if it's probably distribute evenly across 2 to 3 years, then that is where people get used to it. Instead of one shot, the government just implement overnight and let many people suffer, and probably you can see hyperinflation already.
Right, got it. No, I think still Singapore is a very stable country from both from economically and from a political perspective, and Singapore is continuing to maintain its financing system very strong in that sense.
Yes, correct.
The economy has come out very well from COVID, and these tax measures were, as I said, were long due, and I think Singapore government will and the economy will continue to do well and will be a signing silver lining in this pandemic scenario wherein all the major economies are not doing very well.
Yeah, correct. So overall, I think hopefully in time to come with the endemic, probably hoping that maybe by end of the third quarter, where the endemic is over, hopefully, then we can resume back as normal. Because I think definitely businesses why they're still coming to Singapore is mainly because besides stable government, I think our population are quite highly vaccinated. 90% of our population are vaccinated already. So even if you happen to get COVID in Singapore, as long as you're vaccinated, I think the symptoms are very mild. Probably the suffering is also very mild. So I think so it's still a very safe place here overall.
Right. We hope that the global travel should start and we start again traveling, and that
yes,
will help
correct.
many of the entrepreneurs to go and set up in Singapore. So I think with this we come to close to this our webinar, and again I would thank everyone for joining in. We are also live on LinkedIn. And I would thank Dipanjali and also Kiri for joining in. And we would come back with more interesting webinars. And this budget was very important. If I have to summarize, there are 3 main points which we need to look. One is your personal taxation. The corporate tax remains the same, but personal taxation, your GST rate, and also if you are going for EP pass, then there is a slight change in terms of the EP threshold to apply for EP, and overall the budget looks very, as Kevin said, it's a 360-degree covered budget which covers everything from all areas of economy, and from that perspective this is to be a very good budget and will help Singapore economy to grow and continue to stay stable. With this, I thank everyone. Thanks, Keith, and thanks everyone for joining in. And take care of yourself and stay healthy. And we will come and create another webinar very soon. Thanks.
Yeah, thank you, Alok. Bye.
Bye.